Greetings, welcome back. Mitch Argon with County Realty here. I'm going to take you through the greater Reno Tahoe real estate market in just a few minutes. Okay, let's take a look at the greater Reno Tahoe real estate market for March of 2023. This is being done on St. Patrick's Day, so a happy St. Patrick's Day to all of you. You'll be receiving this a little bit later when we get this formatted and sent, so a belated happy St. Patrick's Day. Let's first start off by taking a look at pricing, which is probably most on most people's minds who are looking at the market. You'll see that we have two markets here that have achieved a recent low coming out as our markets are correcting. Reno and Fernley down 10% for Reno from 1 year ago and down 8% from 1 year ago for Fernley. All of our other markets are showing negative territory on a year-over-year basis, and I'll talk about where these markets are relative to the peak pricing that we saw during the midpoint of 2022. So we'll take a look. There are a couple snapshots on pricing here as well. This shows you a month-by-month comparison, so you can see back in this time frame in here, May, June, July, back in here is when we were peaking. You can see Reno on the blue line was peaking right up in here in June, July, and has come down and so forth for all the different markets. So if you want to take a look at this and look at a specific market, pause the video and take a look down below at that. We are showing, I should point out that we are showing on this chart, you can see like this blue line is showing a little more stability here than it has in some prior months. So I'm not sure if we're reaching a bottom or reaching a shelf or what that is, but the pricing is seeming to be a little more stabilizing now, or moving it in smaller increments downward. This is something else that I think most people want to keep somewhat of an eye on. This just shows you the price change from the peak to the trough. So I'm using a peak over here from the midpoint of last year. You can see this is all around the middle of 2022 for the most part. And these are the most recent median price numbers. And you can see the range here. Tahoe and Carson Valley are probably not the most accurate for different reasons, but I'd say in general, we're probably down in the 12 to, as you can see, 18%, 19%. So pretty significant drops since the midpoint of last year. Of course, most of that is due to the increase in interest rates to tame inflation, which is an ongoing battle. Speaking of interest rates, this is a chart that I'll probably be sharing here as we move through this correction period in the real estate markets. And it focuses in on the Reno market just as a bellwether for our region, but it would be very similar, some different characteristics for each of our markets. And it shows what the mortgage payment would be for an 80% down loan at the median price of that particular month in Reno, and the current prevailing interest rate of that month in Reno. So you can see if you go back in here to March or May, pardon me, of 2020, the payment was just under $1,400. The median price was $400,000, almost 3 years ago. Of course, right about this time last year, rates started to rise. You see this significant increase in payments coming in through here. And we've come down a bit from our peak, which is back here in the November-December timeframe at just under $3,000. This is for the median price and the prevailing interest rate in the Reno market at that time. Last month, we were at $2,578, so it's down about $400 per month. The reason this is important to watch, and I'm watching this along with our agents, is that when this price point here gets down, probably a little bit lower down, probably more $2,100 to $2,300 a month, you're kind of at a push point between whether somebody's renting or buying, assuming they have the resources for a 20% down payment. And when the rent and buy payment gets to be close to one another, you'll see many people, if they have the resources, again, opting to buy, which could start to signal a little more activity in the marketplace based on just better affordability. So we'll continue to watch this month after month. Homes sold continue to be down. You can see here in the 19 to, in Tahoe's case, 57%. I'd say in general, probably down about 30 to 40% from a year ago. And so the markets are sluggish right now. There are fewer homes being sold each month. Month supply of inventory, which I'll touch on here and show you a chart in just a minute, is actually, while it's up quite a bit from a year ago, it's fairly stable, which you'll see in a chart here in just a few moments. This chart shows homes for sale by each city, and that's what these different lines are through here. And again, the Reno volume is much bigger, so it's easier to see this blue line. And I just want to point something out. I'm not sure why this is doing this just yet. We'll probably know in a month or two. But if you look back at the time frame last year, January to February, and then you can see we came down January to February, then up to March and up into April. You would expect to see that same trend on an annualized basis. So this year, you can see here's January here. We came down to February, and March, instead of ticking back up like it did a year ago over in here, it's continuing to go down. So this could be from a couple different factors. Some of it could be seasonal. We've had a pretty significant winter this year, and many people have been delaying plans on a variety of things, and putting a home on the market could be one. The other factor that we're really seeing in our market locally and across the country is many people, I think more than 70% of the homes are less than that are owned in the country have an interest rate right now that is less than 4%. So we're seeing a lot of reluctance from homeowners to sell their home, to move to a different home for whatever reason. If it's not essential, they're having a hard time reckoning with trading a 2.75% loan or a 3% loan up to a 6.5% loan, because their buying power has been diminished substantially by the increase in interest rate. So that is one of the factors that's keeping the homes for sale, our inventory, down in this market that we're working through. This is a significant thing to track, because it's kind of locking people really in some ways into their homes. Month supply of inventory, with the exception of the green bar, which is Fernley, you can see it's been fairly stable moving through this period, not rising rapidly, not falling rapidly. We're just kind of staying in this band here of what is technically a seller's market. However, in the current market, buyers certainly have probably more leverage because there's pretty tepid demand out there right now, and things are not moving real fast. So the markets appear to be fairly stable, even though we're continuing to see this downward pressure on pricing based on interest rates as a primary factor. Okay, that's all I have for you this month. I hope this has been useful for you. If you want to read the full report, it's down below. You can go down below. There's a link to the Greater Reno Tahoe Real Estate Report. These charts I'm sharing with you come from that report. There's a lot of other ones in there that if you wanted more detailed information on any specific market, you can find that. And again, if we can be of any help in any way throughout the region, through our agents in any of our 2 offices in Reno or Minden, we'd love the opportunity to help. Please reach out from this YouTube video, from an email that you may receive, whatever it happens to be. And until next month, enjoy yourself. Have a nice day.